Good evening, folks, and welcome to our virtual event, Avoiding the Common Pitfalls of New Home Construction. Just making sure that I'm not muted there. My name's Matt Cooper. I'm a commercial loan officer here at Fremont Bank, and I specialize in construction financing. And residential construction specifically has become a very popular topic right now in the Bay Area, whether it's building your dream home, doing a major remodel, or maybe you're a developer looking to do some spec builds. These types of scenarios seem to be presenting themselves more and more frequently to us here at the bank on a daily basis. Now, before we dive into this afternoon's agenda, this wouldn't be a true Fremont Bank event if we weren't giving away some cool prizes. So we'll be announcing, we have 3 different prizes we'll be giving away at the end of the hour. I'll be announcing those. You must be in attendance to win. So anyhow, look forward to doing that. Now, we're very fortunate this afternoon to be joined by 4 experts in their respective fields for a panel discussion to talk about some of the do's and don'ts when it comes to building a new home. We are also very fortunate to be joined by our moderator tonight, Alexis Kleinhans, Vice President of Commercial Lending here at Fremont Bank, and our resident construction guru. Alexis?
All right. Good afternoon/evening, everyone. Really appreciate the opportunity to be with you virtually. A few good things have come out of the pandemic. One of them, I think, is this type of format for delivering relevant content to a large group with relative ease and convenience from your standpoint. My name is Alexis Kleinhans. I am the Vice President of Commercial Lending, and I have been with the Fremont Bank family for 17 years. I focus on business lending, commercial real estate, multifamily, and construction lending. I am proud to be part of a local bank that has all the services of larger financial institutions, yet remains dedicated to its communities. I will be your co-host tonight and moderator. Fremont Bank is a $5 billion mid-tier bank and the largest independently owned bank in Northern California. For those of you who don't know, our footprint rings San Francisco Bay with 22 branches. We have a top-notch wealth management team that serves trust and investment clients. Our residential mortgage group services over 55,000 borrowers around the state and has funded $3 billion in loans this year. Finally, we reserve 5% of our profit for charitable giving. Before we start tonight's program on construction, I thought you'd like to hear a banker's perspective on the economy. Here it is. GDP is up, employment is up, the equities markets hit all-time highs at the end of June, and interest rates are holding relatively steady, low, with weekly dips and rebounds. From the housing perspective, there is the migration east from high coast urban areas like San Francisco to the East Bay, from the East Bay to the Sierras, and from the Sierras and out of state. For those of us who are staying in town, you've probably noticed your own neighborhoods and downtown areas have numerous construction cranes and contractor trucks these days. Housing construction is hot, whether it's your dream home or speculative home building at this point. With that, let's talk about construction. It is my pleasure to bring this relevant content to you with these amazing panelists this evening. We have Tiffany Amrit, who is an architect with Studio KDA, Jennifer Hinkle, who is a commercial escrow officer for Old Republic Title, Jeff Stone, who is the owner of Diamond Construction, Uwe Meers, who is a real estate broker, and of course, Fremont Bank's own Matt Cooper. We are respectful of your time and aim to keep this to a tightly run 60-minute program, which begins after I stop talking. As we go through the night, please feel free to submit your questions via chat in Zoom. We will do a rapid fire question and answer at the end. With that, let's start off this evening. I will ask each panelist to introduce themselves and in doing so, answer our first question. First question, if you can provide one piece of advice to someone who's doing a major renovation or starting new home construction, what would it be? Tiffany, let's start with you.
Hi, everyone. Thanks for joining us tonight, and thanks Fremont Bank for inviting us to join the panel. My name is Tiffany Omrit. I'm with Studio KDA. We're a 25-person multifaceted architecture firm in Berkeley, specializing in single and multifamily housing, restaurant, fitness, retail, and office spaces. I've been a member of the firm for 20 years, and within our team, I lead our residential and interior design studio. As a child, my mom and I used to visit model homes throughout the Bay Area for fun. And I would take home the floor plans, redraw them, making improvements from a child's perspective, and present them at our dinner table. I believe that it was this early exposure to architecture and to residential structures that fed me and interested me in the world of architecture. Through the years, I remain passionate about interior design, residential architecture, and I enjoy working with the house itself as much as I do the homeowner within the house. I am passionate about kitchen design, bathroom design, assembling thoughtful and harmonizing material and color palettes to improve upon the natural light and circulation within the home, and to be most diligent in finding smart and efficient storage spaces. But what really fuels my soul is working closely with and sharing my knowledge with homeowners to assist them in improving their living environments. As for one piece of advice, Alexis, you're going to kill me. I couldn't do it. But what I've done is I've put together a successful project planning toolkit. And there's a few layers, so I will try to be brief here and keep it simple. The first is that I urge you as a homeowner to analyze your budget, to think about how much you have in reserves and how much you can leverage. And you have a great team here with Fremont Bank, Matt, Alexis, and the Fremont Bank team. The next is to define your program, to think about not just today, but what you and your family need for the future. Remember, you're not buying a piece of cake, you're designing your home, and your home will last you 5, 10, 15, 20 years or more. Talk to your team. And by team, I mean your builder, your architect, your realtor, your financing team. Think about whether or not your ultimate budget supports the program that you have in mind for your home. Consider value in conjunction with costs. And by this, I mean, think about if and how your remodel will change the property metrics that you have. And as an example, what I'd like to point out is that a kitchen remodel is expensive due to the thorough nature of all the trades involved in the kitchen, but you're not changing the metric of your home. You still have a 3-bedroom, 2-bath home with a remodeled kitchen. It does improve the value, but not as much as if you change the number of bedrooms or bathrooms or add square footage to your home. So those projects may cost more, but they ultimately give you more value into the home. To understand the project schedule, the duration, and if construction work will displace you and your family. And then lastly, to avoid scope creep where possible, as it has clear and defined budget impacts. So with that, I will hand it over to the next person.
Jeff Stone, you're up.
Good evening, everyone. My name is Jeff Stone. I am one of the owners at Diamond Construction. We work in residential and commercial development. We have multiple subdivisions that we develop, and then we work for clients building typically ground up homes in the East Bay area. We go to Napa, and then sometimes we'll go to the South Bay. First, I want to make sure, Matt, that a part of those 3 gifts, that the panelists can be a part of those because they sound sweet. So I want to make sure that we are open to that. But then I'll jump into my one piece of advice, which in this day and age, we're seeing even more as the commodities market and the labor shortage market has really had price increases across the residential space, especially in California. is to design and price out all of your project up front. I can't tell you for the last 10 years, since 2007 and 8, architectural drawings and interior design specification boundaries have changed, where a lot of people want to take more of a conceptual set of architectural drawings and ask for either a hard bid or pricing off of it. And what it's done is it's burdened not only the clients, but the contractors with trying to execute on a pre-construction estimate or control estimate based off of allowances. Oftentimes, what a contractor will give you as an allowance versus going to a slab store, a tile store, plumbing fixtures, electrical fixtures, hardwood flooring, et cetera, is far different. So the best one piece of advice that I could give someone that's going to undertake even a kitchen remodel to a new home, even you're doing a rebath, is to really understand all of the plans that you're executing on, and then the specifications and the shopping, which is really on your shoulders to provide to the contractor, will allow them to truly price out what your project is. And in so doing, you're reducing the possibility of contingency and overages because you're better prepared and you have a better understanding of really what your cost is. The second side I'll add to that is a lot of people have the tendency, including myself, to design our home for today, how we live in it. Our kids are 5 and 7 or 14 and 15. It doesn't matter. No kids are at the home. But one of the critical elements, I think, in a well-executed home project is when you're truly thinking through what your 3-year, your 5-year, and your 10-year outlook really looks like. So if you're adding on that room, if tomorrow it's for one of your children that's you're going to kick out when they turn 18, or they're going to be back when they're 22, you need to think, is that going to become your home office? Is that going to become a gym? And to really think about the flexibility and the way that you live within the boundaries of the home, so that you're not designing something just for tomorrow. Because oftentimes I see clients make that mistake where then just 3 short years later, your life has changed so drastically that you're wanting to make another change. So while designing, before you execute, really think about how long you're going to be at the home and what it's going to be as you're living through it in the next 10, 15, 20 years of your life, if you plan to be there that long. Thank you.
Thanks, Jeff. Excellent words of advice. Let's go to Jennifer Hinkle.
Hi, everyone. I'm Jennifer Hinkle, and I work at Old Republic Title Company in Alameda County. I'm a commercial escrow officer, and I work in our commercial and special projects division. I do transactions all over the state, but I do work for Alameda County. I've been in the business for over 20 years. I've been with Old Republic Title for about 9. And I would say that one piece of advice that I could give you from my perspective is every transaction, every project, I call it a transaction, every project is unique. And so patience is very important, because I may come back and ask for more documentation or more information because your transaction is different from the next. So I think the biggest ask of title would be just patience, and we're doing the best we can to make sure everything is closing on time. Thank you.
Thanks, Jen. And I know you'll have more to say about the juicy topic called broken lien priority in a couple minutes here. All right. Uwe Mers, please introduce yourself and answer the question of the day.
Yes, hello everybody. Thank you so much to Matt and Alexis for having me on this panel discussion. My name is Uwe Merz. I'm a real estate broker with Compass. Been with Compass for about 5 years, headquartered in Pleasanton, but also frequent the offices in Danville and in Fremont. Been a licensed agent for about 20 years. Lived in 4 different countries, so I've been around the block. And specialize in custom builds. I was involved in about over 300 custom builds throughout my career. Have a very heavy footprint in Ruby Hill and Pleasanton, and Yeah, my predecessors already talked about some of the items which are really important. To me, is the best advice I can give is to really keep a bird's eye view and to keep the master plan in mind. You know, make wise design decisions. You're going to spend money no matter what, and you better spend it wisely. Yeah, for example, having a bedroom downstairs. You know, just recently showed property, and you know, saw a number of homes that don't have bedrooms downstairs, which nowadays, you know, is it's just not that desirable. That's pretty much it for now. Thank you.
Thank you, Uwe. All right, well, that gives you an introduction of the 5 panelists, because Matt Cooper is the 5th as the construction lender here at Fremont Bank. What we're going to do now is move into sort of the middle part of the program, where we have 5 questions, and we're going to have each 1 or 2 speakers are the appropriate subject matter experts to answer the question. So I'll read the question, tee up the speaker, and then what we're also doing is including the question in the chat. So if you didn't hear it, or you want to write it down and write down notes, you can also reference the question in the chat function. All right, so with that, we've got 5 questions. We got about 25 minutes to go through this, just to give you a highlight. So it's about 5 minutes per question. And then keep thinking of your questions, which you can put in the chat and you will get to at the last part of the program. All right, this one is going to be for Jeff Stone. Talk to us about the importance of knowing what you can build and the permitting process. So really help our audience understand why knowing what you can build according to the city's code and knowing the permitting process is really important.
You got it. Tiffany and I talked about Tiffany starting. Tiffany, do you want me to start or would you like to go?
Either way, I'm happy to go.
Go for it. Like we talked about. Are you okay with that,
Sure.
Alexis?
Yeah.
Absolutely. Thank you.
Awesome.
Yeah, so from my seat, we refer to this as the feasibility. And when we think about feasibility, we think about the feasibility of cost, but we also think about the feasibility of the built entity. So I'm going to set the feasibility of cost aside because projects can vary widely, as can the associated costs. However, but with the feasibility of the built component of your design, every jurisdiction, every zone, and every plot have a defined buildable envelope set by your local zoning department. These include, but are not limited to, maximum height, yard setbacks, lot coverage, FAR, also known as floor area ratio, and parking requirements. The path to project approval and permits also depends upon knowing which department's approvals are required. We have everything from zoning and planning departments, design review, building department, fire department. Depending on the scope, you may have neighbor approvals, there may be a public hearing. And if you live in a community, there might be a homeowners association or other community approvals also required. And it's important to note at the conception of your design project that some may, but many of these approval processes cannot run concurrently. So you're building up a time schedule here pretty quickly. And I want to share with you some approval examples. You can't take these month by month, time by time, because again, every jurisdiction varies. But depending on the scope of your project, say for example, you have an interior only remodel, you're upgrading a kitchen or a bathroom, typically, but not always, that's a building department review, and that can take 2 to 3 months. However, if you're talking about an addition with new floor area, an extra bedroom or a home office, possibly a new wing, a second story addition, or raising the house, then you're looking at planning department design review, possibly a public hearing, and the neighborhood as well. And that would be true for new construction as well. And then just briefly, I wanted to touch on the ADU, which is something that's a hot topic right now. The state laws have changed, as many of you probably know, making the path to adding an accessory dwelling unit to your property significantly easier. And this, more often than not, is a straight pass to the building department with ministerial approvals through your local building department and community organizations as well, such as a homeowners. But once you have all of that squared away and you understand the process, these timeframes that I'm noting also, these are for the approvals alone and do not include the design process leading up to that, which is another component with the project schedule that you want to factor in. But once you have your approved permit, then working alongside a contractor, we're handing over that permit to your builder or to your contractor, and enters Jeff Stone.
Great job. So the importance is really about, as a residential developer, when I'm understanding and evaluating if I'm going to purchase a piece of land, a property or other, really that's our diligence phase of our process. And while looking at any unique piece of land, one, I think, needs to ask themselves, what can't I change first? And typically what you can't change is what direction is the sun coming into the property? What are the neighbors? Are there any noise violations, or is there any infrastructure that's bothersome to you? And from there, that's when you can take that sort of understanding and the direction of the sun, et cetera, and then start the process to go work with an architect. As a land use attorney, I can't tell you how many times I've been surprised over the years of what I thought would be a easy permitted sort of project that ended up taking years and years and becomes quite costly and timely on a side. So the reason why I bring up diligence is if you're evaluating and you don't own a piece of property, work with the right professionals, brokers, and then work with the right planning staff. Take it in on yourself and call the planning staff, that's whoever's running the city or the county, wherever the property is, and ask them questions about whether or not there's a design review, a planning commission, and understand what the limitations are, as Tiffany just said, in the zoning and the setbacks in the general plan. Because really what that is another set of the legal property rights of what you can't change. Often I've been frustrated with my own projects trying to push something through. But then when I go back home and I'm in a residential community and it's quiet and no one else has a 5-story home that's looking into my backyard, I remind myself that these discretionary review processes where you have community members that are volunteering their time to try to benefit the community in a way, because growth is going to occur in the Bay Area regardless of where we want it and how we want it. It's as a community of members to start realizing and recognizing so that we can both grow with our open space and what we truly love about the Bay Area in total. So my final advice on it is to make sure that you work and hire professionals from the get-go that you feel that are confidently working through and understanding what those restraints are on the project, and then helping you really understand how to provide the best project with those restraints. And then again, it's truly understanding the timing with it, because what one could consider a 3-month process can sometimes ultimately take a couple years. One final example is I have a project right now that we're on year 5.5, trying to subdivide four parcels that are 24 acres in Orinda, where they're 6-acre parcels, but with the Regional Water Control Board, the Army Corps of Engineers, the Department of Fish and Game, the environmental impacts, and so on and so forth. It takes a long time here, which is ultimately set up for our protection so we grow properly, but can take you a lot of time and cost you money.
Thank you, Tiffany. Thank you, Jeff. So it sounds like it's really either the general contractor or the architect would be the appropriate subject matter expert to know that city's zoning and process. Are there other professionals that could also be relied on or hired by a builder to go through that process?
Often you need to get a land use attorney involved, and I always bring a civil engineer in to understand it. And then depending on the issues, sometimes you need to get an arborist involved, because if there's protected trees, to understand the drip lines, and it's property by property, but you need to make sure architects are generally a great spot to start because they understand this world, and then they would be able to tell you whether or not you need to go to a land use attorney or other if it's more complicated. Tiffany?
Yeah, I would agree with that. It's, we're working daily with our local officials to understand the plan. And even in Berkeley, our plan is changing. We're changing parking requirements in commercial zones as well as residential zones, which is really benefiting in aiding densifying our residential zones. That's just one example, but there are a handful others. So it's staying in close communication with the zoning department, keeping eyes on bulletins that are released, and just the continuation of projects.
Thank you. All right, let's pause and move to our second question, which is really going to be in Jennifer Henkel's lap. And so this is a topic that those of us on the panel are familiar with, and we don't want anyone who's contemplating building a home to fall into this trap. So listen up. The question is, what is broken priority? And why do a title company and we bankers have a cow when priority is broken? What does that mean, Jen? Help us understand.
So broken priority is terminology that we use in the title industry where construction has already begun. And broken priority is, it's tough because if you've already begun construction, then Fremont Bank is going to want a certain type of policy. And when they come to the title company and say, they've already started construction, but we still want this policy, then we have to make a decision on how can we make this happen for the borrower and the lender to make sure we can bring it together. So let's back up just a little bit on broken priority. You may think, yeah, I haven't started construction. However, there's a porta potty on the property. There's maybe some dirt moved on the property. There's tools, equipment, a trailer. That's all considered broken priority. The property has to be completely untouched by the general contractor or any tools or any kind of item on that property. And what happens is the Fremont Bank would want to be in first position when they record their new deed of trust. If there is been construction that has already begun, there's a potential for a mechanics lien, which would take priority over the new lender's deed of trust. And that's where the new lender has a cow, because they want to be in priority first position. And that's unclear if construction has already begun, because there is a potential for a mechanics lien that would be in first position in front of the deed of trust. So older public title actually has some alternative policies that we can do for Fremont Bank. However, not a lot of title companies are going that route right now because construction is so hot and a lot of people have broken priority, and title companies want to stay clear of that because it's one of our biggest risks within the business. And I think that's good. Alexis, should I touch on anything?
That's great. Thank you, Jennifer. And then Matt, did you want to add real quick anything on the challenges that broken priority causes with us lenders?
When you said broken priority, my pulse instantly went up about 30 beats per minute faster. Jennifer pretty much covered everything. And yes, I mean, sometimes it is simply unavoidable and we do our best to work our way through it. But in those instances where it is absolutely avoidable, it is key for folks that are thinking, have an inkling about taking on a construction project, to know what that means, because there are a lot of instances where it is avoidable if you just knew. And so yeah, Jennifer explained it very well, but it's something that we have to deal with on the construction financing side. On probably half the deals it comes up. So and I wanted to say something, because I didn't really answer the question on my advice. Every single panelist on here is unbelievable. And I kind of threw all my notes out the window as soon as everyone started talking, because they were just making so many fantastic points, so valuable to folks that are potential construction borrowers. But one thing that kind of flies under the radar is what Jennifer does. Having a knowledgeable escrow officer who is well-versed in construction just makes a massive difference. And we see it on the lender side, because we don't necessarily get to choose who the escrow officer is. That's up to the customer. And so we see it when we're dealing with potentially an escrow officer who's not as well-versed. And so I would just say that, not that this is a commercial for Jennifer, but I mean, she is phenomenal at what she does on construction, and Old Republic is hands down is probably the best title company to work with on construction financing.
Thank you, Matt. I mean, it is, choose your partners carefully. And one of the benefits of participating in this workshop tonight is that at the end of tonight, you'll receive the contact information for each panelist, and you can always reach out to Matt and myself. So you now have some guidance and some experts that can point you in the right direction. All right. With that, Matt, I'm going to come back to you. The next question is going to get into construction financing. So what are borrowers most surprised about in applying for construction financing?
Well, I think Tiffany actually hit on it earlier, and I don't know if this was intentional or not, but knowing your reserves, what you have to fall back on. That is something that oftentimes is never really thought about when applying for a construction loan. That the lender, Fremont Bank, is going to have a certain percentage of reserve requirement compared to the hard costs that you are in need of to build your home, or any project for that matter. So I would say the number one shock I tend to get is the reserve requirement. Folks just aren't quite prepared for that. Another thing that tends to, it's a pleasant surprise, I guess you could say, is that you really don't make payments out of pocket on construction loans. A construction loan is essentially a line of credit with monitored draws. And within that line of credit, the entire budget for the construction project is spoken for, including all of the interest payments that go along with the project. So you're not making monthly payments on construction loans. That's sort of a pleasant surprise. You're still making the payment, don't get me wrong, you're just not making the payment out of pocket. I would say those are the two biggest ones. So
reserves and no payment out of pocket. Did you want to share what an example is of a cash reserve and how that's calculated?
Sure.
To give people an idea.
Because a construction loan is interest only, we have a formula for calculating. Let's say it's a $1 million construction loan. We would pre-calculate 12 months.
So this is the question. Sorry, Matt, to cut you off. This is the question on reserves based off of hard costs. So people are thinking about their cash reserves.
I apologize. I think it's the interest reserve. Yes. So for the reserve requirement, we want to see 15% of hard costs. We want to see that the borrower has that in reserves. And that is something that sometimes folks are just simply taken aback by, Because if you're looking for, say, a $3 million construction loan to build a nice custom home, that's a fairly large amount in reserve. But it keeps it in perspective too. Oftentimes with the reserve requirement, it's sometimes a bit of a reality check of what is your budget? What is your real budget? What should your real budget be? So yeah.
Yeah, important to put that out there. Thank you. All right. I would love to hear from Uwe. Since you are a real estate agent in the Tri-Valley, you've done so many different transactions. You've helped people acquire land, build their homes, sell those homes that they've built. What do you consider? What are the most important considerations when building a custom home? What have you seen from your clients and learned along the way?
Yeah, thanks so much for the question. I mean, Tiffany and Jeff already brought up a couple of really important and crucial things. Where do I start? Out of own experience, and I talked to Matt about it the other day. I had a couple, who was looking at a 20-acre parcel with a 2-acre building pad, and they seriously wanted to build a 2,000 square foot home just to begin with and then see where it goes. I mean, that obviously doesn't make any sense. You really have to have a master plan in mind. Where do you want to go? Ideally, you think it through. Ideally, you finalize, your design idea. And the value of the properties is really impacted by your design decision. There are certain neighborhoods, for example, that command a certain style, being Italian villa, formal French Mediterranean style. And then other neighborhoods really love to see craftsman style buildings. That in itself might impact the value of your property by 10, 15, 20% easy, right? Design decisions like, I talked about the bedrooms, having a bedroom downstairs. I'm personally a big fan, and I see it in the field all the time, of a more monochromatic kind of, design inside the home. You can always bring colors into your home with furniture, draperies, those kind of things. Again, Tiffany and Jeffrey talked a lot about it already, but I would say really keeping, the master plan in mind and following through.
Thank you. I take a little bit out of that, understanding your neighborhood. If you want to
Absolutely.
Build something that is similar to the neighborhood and the architecture in that area, looking towards the future. I think Jeff talked about building for the future uses.
Correct.
Anything else, Tiffany or Jeff, on the question of what to consider when building a custom home? Sort of the big consideration.
If you're talking about building from the ground up, yes, there's a lot to consider. The first, starting with the land that you're working with and the orientation of the property, where the sun rises and where you want to be within the house when the sun rises and where you want to be when the sun sets. That impacts natural light throughout the day. That impacts whether or not you are awoken by the sun. It impacts your energy bills. I mean, the sun is just so important to everything that we do. Aside from that, I would work with clients to understand the flexibility and the program of the space. Jeff talked a little bit about it. I mentioned it, and I think Uwe mentioned it as well, that think about whether or not this home is a 5-year home, a 10-year home, or a forever home, and where you are when you're starting this process. Are you starting with toddlers? And how flexible is that home through that point in time to when they're in high school, to when they're leave, and or to when you're potentially inviting your parents back into your home environment to support that that part of living and that part of life. Those would be the 2 points that I would bring up. Jeff, is there anything else you would want to add?
Yeah, I think the biggest thing that I'm always surprised on, and not surprised, but a lot of clients, or even for myself, considering to do a project, what I always tell my friends, clients, or anyone else is if you're in a relationship, go into separate rooms and write down what your wish list is, and write down really what it is that you want individually, and then have your partner, spouse, or whatever, whoever's doing that, do the same. And then come to a table. A lot of time you're going to need a glass of wine to argue it out, but to come together and actually dovetail your needs, your wants, and your desires before you start that process of designing your home, so that while you're in the architect's office, you're not arguing about whether or not you want a bocce ball court or a pickleball court, and iron out really what those large areas is. And the second thing I would tell people before they embark on building a custom home is there are so many decisions that you have to make during that process. And a lot of people are not equipped for the time commitment to determine whether or not the stone in the bathroom is going to have a bullnose tile with cream grout, or if it's going to have a Schluter tile with an off-white grout. And I'm joking and jest about it, but we have spreadsheets and spreadsheets when you're building a home, and the critical path of building on a consistent basis relies upon having the decisions way up front. So if you're going to embark on building a custom home, realize that there's a huge time commitment if you want to do it properly. And the more you design and work with your design team up front before handing off to the construction team, the more you'll save and the less frustrated you'll be during that process.
Excellent. Those are excellent words of wisdom from you experts. It is so true. Having gone through a home construction project, making the time to make the decisions, just right off of Jeff's most recent point, is very important, because everything is waiting for the owners to make those decisions. And there's such a trickle-down effect that affects the timing and everything. Great points. Thank you. All right, let's finish this round of the conversation with the final question, and that is a brief overview of what the construction draw process looks like. So this question is geared to Matt Cooper as the lender, and perhaps Jeff as the contractor who has to keep the payments going. So do you want to give a high-level overview, Matt, of the construction draw process?
Sure. So essentially, the construction loan is a line of credit with monitored draws, and you're most likely going to be doing one draw per month. So when the loan is finally approved, we'll have a very detailed budget and cost breakdown that everyone is in agreement with, that we're providing to the borrower. As the draws come in, you're going to be drawing funds from the line of credit and paying interest on what you have drawn. Those interest payments already being built into the loan. The funds are being drawn based on work that has already been done. So the draw requests come in with a request for funds form. It's a very specific form that will be executed by the GC and the borrower, or the borrowing entity perhaps. And then along with the request for funds form will be invoices to show of proof of payment to subcontractors, materials, and the like. Once those forms are matched up along with the budget and the cost breakdown, we send out a third-party inspector to do a site visit, inspect the work, to inform us of the percentage that has been done. Once that has been approved from a third party, then we, the lender, release the funds into the account that has been set up to the borrower, so that the borrower can pay their general contractor. Or if the borrower is the general contractor, it's all the same. That is a very high level, kind of condensed version of it. I would say one thing that I think sets us apart from some other lenders on the draw process, because I think this is one of the things we are best at, is that we don't outsource any of that stuff. It is all done in-house. And that's kind of what Fremont Bank's about. So we get to know our borrowers very intimately through this process. We get to know the projects very intimately through this process. And I think that goes a long way, because I have, spoken with folks who maybe they opted not to use us for a construction project. And I followed up with them because either I know them professionally or personally, and I have been informed that it's just not the same. I'll hand it over to Jeff if he has any more comments on draws from his experience.
I call Matt and I'm like, "Where's my money?" That's a really good summary of it. It's internally in a construction company, we have control estimates and we're billing percentages of line items. And as the work is progressing in plumbing, let's say the rough plumbing's done, we will bill a percentage of that line item that's been submitted to the bank with the rest of the line items that we go through. The only thing I think I can add to Matt is that we have to get, a lot of people don't know what conditional and unconditional mechanically.
Lien waivers, yeah.
Waivers are, but it's an important note because a lot of contractors will hold their own progress because the preliminary and the conditional and unconditional lien releases, which then authorizes the bank to release the overall draw, needs to be collected and accounted for through the general contractor and the subcontractors that are working for us. So it's well organized, and Fremont Bank does have the best reputation in the area for construction debt. If you're keeping the contractor organized and the owner is organized and everyone's being responsive and understanding, there's typically a few things that will be just, you need to update this or this or that. And as long as everyone's being responsive and transparent in their billing, and I think that's a really important part when you're qualifying contractors to ensure that transparency exists, then it goes pretty smooth. And as long as everything's good, it's not bad. Yeah. I still call Matt, "Hey, where's my money?" Yeah.
Oops.
That's funny. I was muted and talking. I was going to say at this point that was 25 minutes hearing from 5 panelists on like 5 really important topics related to building a custom home. At this point, we're going to transition to the latter part of the program, which is the audience questions and then rapid fire questions. And so what we've set up is in chat, you can type your question. Tanya James in our client relations group is monitoring the chat box. We'll get the questions to the panelists to reply. But right now we need to hear from you on the questions you have for the panelists. So I'll just pause for a moment and let you guys pose your questions.
Alexis, we can start. I got plenty.
Awesome.
All right.
All right, Tanya.
Hi.
Take it away.
First one is, can you touch on ADU and SB9?
Who's tackling that one? Is that Tiffany?
Well,
or speak.
Did you want to go? No. So SB9 is the state law, the more recent state law that has approved ADUs, approved a path for ADUs to help densify our residential environment and our residential zones. It sets a path that creates an administrative approval process for an ADU, and it helps explain and define multiple types of ADUs, both for residential and for commercial properties. Within that, there are freestanding ADUs, there are junior ADUs, and there are ADUs that exist within existing architecture. So you could convert an existing space like a garage or a basement or another part of your house without necessarily changing the building envelope. If there's anything more specific about ADUs, I'd be happy to answer that, but that's kind of a general overview.
There's actually one that leads into that, or another one. It says, from an allowed floor square footage rule, is it better to add an ADU after completing the main house build, or should the max allowed floor square footage be the same as when you add the ADU at the same time you build the main house? That was a long question. Shall I repeat it?
Let me take a stab at it. I believe that they are separate paths. The allowable floor area for your house is is set forth by your zoning department by various different metrics. It could be a floor area ratio, it could be a site coverage, a lot coverage. However, the ADU is something entirely different. So you can add an ADU to your property even if you have maximized the floor area of your house. Understanding that those are two different entities is highly important in understanding what an ADU is. As to the process of what should come first, I would think that your primary home should have may have a certain hierarchy over an ADU, but it highly depends on what the purpose of the ADU is. And then the other thing that I would encourage you to look at with a builder or with related trades is what types of additional utilities need to be brought out for the ADU, whether it's attached or detached, but you may need to increase the water line. You may need to increase your electrical or your gas service to support the new ADU. So if that is in the planning, then I would recommend that there's a certain master plan approach to understand what the needs for both the main house and the ADU are, so that you're only upgrading the utility infrastructure one time.
Great. Next question I have is, what are the main things to consider when shopping for a construction loan?
I love that question. Matt Cooper?
You know, sorry about that. When shopping for a construction loan, you know, you're going to get what you pay for, I would say. I think like in most things in life, I really do believe that. And also the earlier, the better. Just if you can get to discuss the financing aspect as early as possible, the better off you are. Especially, hopefully before you are actually purchasing or making a very large cash payment on whether it's land or investment to some other project. But I would just say the earlier you can get to any financing institution to discuss the possibility of a construction project, the better.
And I'll add 2 cents just from the lending perspective. It is important to know your lender well, because that lender is the one who may pick up the phone and call the Jennifer Hinkle to work through an issue. So there is something about having that subject matter expert on the lender side who has the connections and has the resources and has the motivation to be your advocate, not just getting approval for the loan and talking you through the process and then leading you through the draw process, but also who has the network and the wherewithal to call on the resources of all the parties involved. I love going out on site visits. I talk to the general contractors. I talk to some of the subcontractors. I've called title companies to help close deals. And that's just part of what I want to do for my clients. And so I do think there's value to having a competent construction lender on part of your team. It's not just a mortgage loan. It is way more than that.
I want to add to that, as a developer I have many construction notes out. A lot of times people are just looking at the rate, the length of the time of the note, the guarantee, the contingency, the reserves, et cetera, et cetera. But as I've been taking construction loans for almost 10 years now, and I want to reiterate what Alexis and Matt just said, because there are a lot of issues that come up in construction draw processes and construction loans that aren't in the just a standard mortgage, that if you have a good team that's working with you and there for you and supportive during that process, it makes what could otherwise be a very stressful process doable in many ways, where you're not scared of the outcome because you have a good team like Alexis and Matt and Fremont working for you. So I can't, as a person that takes these notes myself, I can't reiterate the importance of the team that's working behind the scenes on a construction loan.
Okay, I have another question. What methods or measures does the county tax collector use to judge the price of a built house, or the built house with construction loans as well as without?
I think did I just get off the phone with this individual who asked this question like a half an hour before the Zoom call started? I'm wondering, because I feel like I just had this conversation, but I'm gonna defer to probably to someone with a little more expertise.
Assessor's office is so when you submit your permit, say you're doing it in Contra Costa County, you're providing the Contra Costa County with a actual build set of the permitted set of drawings that they take in, that's then rerouted to the assessor's office. Typically, if you're not adding square footage and you're doing an interior remodel, that scope and the cost of work, which is the basis of the permit cost, that then goes to the assessor's office, and then they're going to mail you at the completion of the project a little yellow form that you fill out to let them know what has been added to the home. If it's a new home, and oftentimes if the assessor feels that the values that were put in on that piece of paper are not accurate, they will subscribe a square footage price for new construction on additions and new homes, and they will subscribe a remodel price, and they will make their own assumptions that then forms the new tax basis for your property tax bill moving forward. There are instances where the assessor's office doesn't accurately define that, and you can challenge the way that they have now reassessed your property moving forward, which is obviously protected incrementally by Prop 13.
Thank you. Who do the monitor draws get dispersed to? The contractor or the borrower?
I can take that, Tanya. So that the way that the draws are dispersed to the borrower, and in some cases the contractor may be the borrower, but yes, the disbursements are dispersed into an account that we have set up for the loan, which enables the borrower to cut a check to the contractor.
Thanks, Matt. What's the lowest and the highest per square foot construction cost currently?
I can speak from what I've seen. You know, it depends on the type of build. Obviously, some spec builds, you know, the bottom line is to get the largest margin possible. But you know, anywhere from, I feel like it on the low side, probably 300 a square foot, to the high side, maybe 750 a square foot. That sounds crazy, but we have seen some budgets that are that high.
Thanks, Matt.
Maybe Jeff or Tiffany.
Yeah, I don't want to touch this one. The price per square foot depends on what you're building. There's all different types of building. There's custom, there's production, there's semi-custom. I have a building right now that's at over $1,000 a foot. I also have one that's closer to $350 a foot. So the selection of materials, the design, and the size is a large impact. If there's a lot of grading, retainage, drainage, site work, utilities, roadway, et cetera, that can all incrementally change a project. But there truly is no cost per square foot. You need to understand exactly what it is that you're designing, and then pressure test that with people that are giving you guidance on the home. But overall, when I'm asked this and my friends are pushing me on it, in the East Bay area, I would at least budget $450 a square foot in the current market.
Thank you. Does Fremont Bank only cover the Bay Area? Do they cover other areas like Riverside County?
Great question. Our primary footprint for construction is the Bay Area. We have gone out of the Bay Area before, but it is on an exception basis. We have done some projects, say up in Lake Tahoe, but for the most part, we're a Bay Area bank when it comes to construction.
Is the reserve part of the actual loan, meaning that the loan should be higher than the planned total expense will be?
That is not necessarily the reserve. That would be more of a contingency. But the answer to the question is yes. The loan is going to be larger than the budget. In the essence that if you're looking for the largest loan that you can possibly qualify for, that's not always the case. You know, we have folks that might have a $4 million bill, but they only need a $1.5 million loan. They're doing that by choice. So we have borrowers who can afford to pay cash for the project themselves. They see the value in the construction loan because they understand that having a third party involved monitoring the process adds a lot of value to it.
Okay, and Matt, you're up again. Says this question is for Matt. Is the 15% down payment static across all construction loans, no matter the dollar amount? And then the second part of the question is, could you explain the not making direct payments a little more? They didn't get that.
Sure. It's not a 15% down payment. The 15%, we want to see 15% of the hard cost. For example, if you were building a house and the cost just to build the house is $1 million, we want to see that you have at least $150,000 in reserve. That's not going to have anything to do with the project. So it's not necessarily a down payment. It's just something that you show that you have in reserve. As far as the not making payments, was that the second part?
Yeah, it was. Could you
Correct.
speak a little about direct payments, not making direct payments?
Yes.
Yeah.
So we pre-calculate the payments on the loan. So if we're giving someone a loan for 12 months and with a pre-approved 6-month extension, we will pre-calculate what those interest payments are for that time period. Now, since it's a line of credit and you're only paying interest on what you've used, the payments get larger towards the end. For the first 6 months or so, the payments are not very large. So we have a specific formula for that, how we calculate that. And I would actually be happy to have a discussion with that individual who's asking that question, really get in depth and tell them exactly how we do that. But we pre-calculate that interest reserve. That's a different reserve, an interest reserve, and that's built into the loan. That's why you don't make payments on the loan out of pocket.
Awesome.
Thanks, Matt. Alexis, we still have a couple more questions. I don't know if we want to hang on. I know we're at our time limit.
Do I need to get to the prizes here really quick? I'm happy to take questions all night, but I know I know folks are, I'm sure there's 10% of these people on here just on here for the prizes. So I feel like we were obligated to at least announce them at 6 o'clock like we said we would.
I feel like let's do that. Let's get to our prizes. I'm going to make people wait because we do have one last question to go around to each panelist. So this is the final rapid fire one. And then Matt, you can announce our winners. And then for those of you who have more specific questions, I think Matt and if the panelists want to stay on afterwards for a longer Q&A, we're happy to do that. But let's make sure we get all the relevant info out now at this time as we had planned. So last rapid fire question, and the contest here is to use as few words as possible in responding. Okay, panelists? All right. What is the biggest pitfall from your expertise or perspective to avoid? We're going to go with Jeff first. We're going to go in the same order.
Over design.
Okay. Do not over design. That was one word. Thank you. All right. Going to Tiffany next.
Scope creep. It's hyphenated.
Scope creep. One phrase. Excellent. All right. Jennifer Hinkle.
Mine's a little longer. Sorry. If you have broken priority, meaning you've already started construction, just tell me and tell your loan officer. Don't try to think we're not going to find out, because we will do an inspection and we will find it.
So true. Hey, you say you get extra words for this topic, so that's fine. All right. Uwe, biggest pitfall to avoid.
Just keep it real and understand what you really need.
So understanding what you really need
Mm-hmm.
from the design perspective.
Yeah, I mean the matchup between your budget and what the expectation to what you're eventually gonna get. Yeah.
Thank you. Matt, biggest pitfall.
Oh yeah, I'm biased. So waiting too long to talk to your friendly community banker. Always be talking to them, even if you're just have an inkling of wanting to do a project. So you know in advance, you know, how real it can be and how the bank can help you or how they might help you in telling you don't go down this road. It's not for you.
Thank you. Excellent. All right. With that, it is a few minutes past 6 o'clock, and Matt, you get to announce the 3 winners of these 3 awesome prizes.
All right. Prize number 1 is a wine tour basket. It includes 4 bottles of wine, all from Fremont Bank customers or wineries that are Fremont Bank customers. That goes to Alex Ganavati. And I have to say your name 3 times, Alex, and I hope I'm saying it right. Alex Ganavati, Alex Ganavati, Alex Ganavati. That's a compliance thing. I actually have to do that. So congratulations, Alex, on your wine basket. Prize number 2 is a whiskey basket. There's a theme going here. This includes a bartender kit, a single barrel select bourbon, an ice set, 2 glasses, and a Whiskey Baron cocktail recipe from Beer Baron. The winner of that is, it's Todd Vitzum. Todd Vitzum. Congratulations, Todd. Drawing prize number 3. This is a major step up from the previous 2 prizes. A romantic getaway includes a 2-night stay at Fremont Bank's Los Altos house for the winner and a guest. This is a pretty phenomenal giveaway. The winner of that is Vina Rossler. Vina Rossler. Again, I apologize if I misspoke on your name, but I have to say it 3 times. So congratulations to the winners. Thank you all for joining us. This was phenomenal. Thank you so much to the panelists. It's always fun being the dumbest guy in the room. You guys were great.
Kudos, really appreciate it. Thank you, Matt. That is a wrap. I am sporting my Fremont Bank hard hat, which I love bringing out to job sites and doing presentations with. Go for it. Thank you to our amazing client relations group and marketing teams. Really appreciate the support in putting on this format. What a great group of people to work with to bring this content to you. And for all of you who are still hanging on, I did mention, but you will receive an email following up with the contact information for each of the panelists. Please feel free to reach out to them or us. And with that, this officially concludes tonight's event. But I will certainly offer up my time to stay online if there are any further questions.
There are, Alexis. I have, I think, 2 or 3.
Great.
Okay. If you are incorporating a pool, is the price of the pool included in the building loan or a separate loan?
Great. Matt, would you like to take that?
Yeah. I guess the simple answer is if that's part of the project budget, that's part of the project budget. So that would be part of the construction. Ideally, we don't see that too often, but we do not have separate pool loans. So if you did go that route where you did build your house and decided you wanted to put in a pool afterwards, you would most likely do that if you wanted financing via home equity line of credit or something like that.
Okay. Does Fremont Bank need the building plans to be completely approved before they accept an application for a construction loan?
Great question.
Great question. You know, the application process, we're going to, my advice was, please come early. You're much better safe than sorry. You know, if you're still in your process of getting your plans approved, it's actually a perfect time to start discussing financing. So yes, starting the application process is not contingent upon having approved plans. So
The implication is we do need, the lender needs your plans and specifications and a cost breakdown to order the appraisals,
Yes.
which is one of the important steps. So a lot of work can be done, but in order to order the appraisal, which will give us that future value as completed and allow us to finish the underwriting, your plans and specs need to be robust at that point. You know, maybe there's a few minor changes, but have to be very close to what is going to be built, because that's what the appraiser is going to use for the value.
Okay, I'm not sure if I have all the words in this question, but maybe you guys will read between the lines. Is the contractor getting percentage of the project portion completed, or is there a reserve, and what amount? Is that enough information?
Depends if there's a retention involved on the contract. Some banks require a 5% retention to be in a single family residential contract, which would mean that every billing cycle, a percentage of the contract will be held until completion. But in residential and commercial, that's very common. In residential, it's less common that retentions are being held because they're being billed on a monthly cycle on work that's already been completed and inspected.
Okay. Amos, if that answered your question, great. If you want to add anything else, if you're still on, go for it. I just want to make sure we got everything that you wanted to know. And there might be one more. Nope.
I'll offer one something up, Tanya, while you're going through the questions. So one of the points that we did not bring up in our presentation, but if anyone is still listening, is oftentimes when one embarks on building a home, they may overpay because they are the owner builder, or they are, you know, it is a custom home. So sometimes there is a mismatch between what you think your home is worth because you're paying more for certain amenities or certain design, and what that home is going to appraise for financing. So if I were a panelist, I would have asked for a question about sort of how do you handle that when someone overbuilds or over designs, and then the appraisal comes in lower. The hard facts are that as lenders, we have to anchor the underwriting and that value to what the comps are, the comparable projects are that are being used to derive the value. And so there are times when homeowners, because it's pride of building and pride of ownership, will spend a lot more than, you know, what the comp says is the appropriate dollar per square foot. We can only lend on that appraised dollar per square foot. So what does that mean? It means you might feel like you're getting fewer loan dollars, but and putting in more cash for the project. That is the case. There's no way to get around that. But that is, you know, sometimes that happens. We might want to spend a little more on ourselves, and just because we can. You just may not get as many loan dollars out as you expected.
I see it on every project, and I explain it to my clients that a lot of custom home builds are not a return on investment, they're a return on lifestyle. And a lot of decisions that are made when you're at the tile store and the incremental small decisions that you make. And that's why I advocate you need to make these decisions early so you have your hands around what the total cost of the project's going to be for those decisions that you're going to make. But that's a lot of times people will come and be like, well, my house isn't going to be worth that much after I spend it. And it's like, yeah, that is correct.
Yeah.
But
Thanks,
enjoy
Jeff.
it, right? Okay, last question. What are the consequences of starting the construction, then getting a construction loan during the process?
Well, the consequences are you probably it most likely won't be a construction loan. It'll be from, you know, most likely another type of financing institution or a private lender. It's just that kind of coincides with the broken priority. It's difficult to actually give a construction loan on an active project, and so if that's the case, and that comes up often, where we'll get calls where a project is 75% complete and they say, hey, I've done all the work, I just need a construction loan to get me across the line. And in that case, I'm typically, you know, saying, hey, you know, it'd be very difficult to get a construction loan from a bank from any bank. So we have to, in situations like that, we have to, number one, try to get creative, see if there's any alternative ways to finance what they're looking for, or refer them to somebody else that does loans like that.
Which is typically more expensive. That it would be
Yes.
the non-conforming construction lender. It's not your Fremont Bank. It's not another financial institution. It might be what's called hard money or private money.
Yeah.
Was that it, Tanya, from the questions?
That's a wrap. Yes, it is. Thank you for
That's
the
a wrap.
opportunity.
Awesome. Well, thank you, everyone. Thanks for to each and every one of you panelists. Really appreciate it. And thank you to those of you who stayed on for a little extra information. We hope we've all provided some valuable content and learning in a pretty short, compact, program.